Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's January 14th. This will be our chart lesson for today. And just a reminder before I forget, Monday is Martin Luther King Jr. holiday, and I've gotten a couple of emails. People ask me, about trading that day. I do not trade those shortened holiday days. The volume's usually down. Doesn't mean that we couldn't have a big move that day, but I use it for an excuse to take off and then spend it with my family or whatever. So um, I recommend you don't trade during those days, but it's up to you. I think the market closes at noon, so you get in a trade and it doesn't go anywhere, and you get stuck and you got to exit with a loss. So to me, it's not worth it. I look for excuses to take off anyway lately, so that's just an excuse for me to take off. So I will not be here Monday. No chart lesson, no midday chart, and probably I will probably trade tomorrow morning, but I'm gonna leave early, so most likely no chart lesson tomorrow. I'm not doing many on Fridays anyway anymore, so definitely probably won't be one tomorrow. But let's talk about the trades and go over what I saw today. Starting off, we were in a clear trading range, and you can see, hopefully, you can see the EMA in the middle there, and look how prices are swinging back and forth over and over, and that's a sure sign of a trading range. So once you see a trading range, the good thing about this range is it's large enough where there's some pretty nice trends from top to bottom, and they're playing out really nice. That allows you to trade the trend back and forth as well as try to buy or sell the lows of the range. So generally you want to buy and sell the lows, but if you get a nice trend working up, by all means trade it. And we had a couple of nice ones up and down. And then we suddenly had this thing go up and it just takes off. And this didn't surprise me at all. Generally, after a huge sell-offs, even in a strong bear market, when you get a big sell-off, it's not very long, usually a day or two after that, you get this huge buying rally. And as the prices start going higher, they start hitting all the stops of the people that got short trying to get long-term trades, and they all start exiting, and then suddenly it's booming and really takes off. So you can see we went from, and somebody reminded me yesterday that we do have the ruler on the chart that tells you. So we went from a low there all the way to a high. So let's just see how big today was. Today was a 56 point move. So this one wasn't as easy to stay with because you had this bigger sell off here. And there probably, you probably could have found this trend line here. There's a bigger trend here, and that would have helped you maybe enter back in right in here, but you didn't need this because there's other reasons to get back in here as well. But you can see there's a bigger trend line right there, and this did confirm it. So you've got that there as well. Um, I'll leave it there for just because when we come to it, it'll make it a little clearer. But you can see that this was a 56 point day. I mean, if you can just get a runner or two on a couple of these moves, you do real well. So keep that in mind. We talked about that yesterday, but you can see this trend right here was really strong going up. You didn't get anything but first entries off this all the way up because it's so small and tight and so strong. And it was easy to find. Then you get a break here, move to a new high, then that's when the correction came in. And then when we started higher again, I would be looking for a measured move. And you can see I've got my arrow here. You draw that first line or that first move and look for the second move. We didn't quite get there, but it's very rare that you're going to shoot through a strong support or resistance area and not come back and test it. And you can see, even though it took a little while, even this big trend, we came back and look where we tested that breakout area, and then we went higher from there. So no surprises when prices started working lower here. That's what I'd be thinking about. Hey, we're probably doing a retest of that breakout area, so be prepared. And then once you get there, look for it to possibly give you a reversal pattern. And so there's no surprises here if you understand what's going on. And then you look for a measured move there, pull it over here, and you see we got almost a, it gives you a perfect, it tells you where it's probably going right down there. And where is that at? That's a retest. Boom, and off it goes. So keep always look for those measured moves and look for those retests when you break out. And notice, and the other thing was this was a range, so I measured this range and I pulled it up, and so that was a target as well. You can see that target right in there, and it looked like maybe we weren't going to make it when we didn't quite get there and turn down. We were coming back to test this, and then notice we start going higher again. And even then, it kind of pushes on through that area, but notice when it starts coming back and testing it multiple times, and it's holding, so it bounces and goes higher. And plus, you've got this little range right here, or this channel working up right here, and it's bouncing off that trend line every time and going higher. So those are all important things to remember about the overall picture of the chart that's speaking to you. This, you can't just look at one little small area and look at a pattern and know for sure exactly what's going on. Even though if there's a trap or something, you probably can take it 9 times out of 10, even if you're accidentally counter trend trading. But some people get confused on that. You got to look at the bigger picture, and you got to know where the support and the resistance is at and where the trend lines are at, because all of that is a piece of what we do. So it's not just as easy as picking out a pattern and saying, I go long or short here. Somebody sent me an email today, a fairly new guy, and he's buying and selling all over the place. And he asked me what I thought about his chart, but he basically was buying this thing all the way down, and he held on, and it did come back. But what if it doesn't come back like it did yesterday? He would have got slaughtered. And then he was selling all the way up through, or he started selling up through here, and or actually I think it was maybe up through here. I'm not sure where, but I couldn't really tell what he was doing, but it looked like he was buying all the way up or selling all the way up, and it never came back. So I'm assuming he probably lost on those trades. I don't know. It was really hard to tell. There was just so much, there was so many buy and sales on his chart. It just was almost impossible to tell. But I'm not picking on that trader. I'm just pointing out that, you don't want to over trade. You only need a handful of trade, 3 to 5 trades every day to make really good money. You really don't even need that many, depending on what your targets and your goals are. Starting out, you may only need 1 or 2 trades a day. But even once you get pretty good at this, you only need 3 to 5 trades a day to make a really good living. And so do not try to just sit there and trade over and over and over. The more trades you take, the bigger odds you're going to get it wrong, because there's not that many good setups every day. There's more lately with all this volatility, but generally on a really good day, on an average day in the ES, there's 8 to 10 really decent trades. And so if you're trying to trade anything more than that, then you're obviously over trading and probably taking some very risky trades and some very bad trades. It really is the thing. Most of them, people are taking really bad trades. So let's get on to the chart lesson. I've got a little bit of a sinus issue and my throat's bothering me a little bit, so you probably can notice it in my voice, but I don't feel bad or anything, but my throat is kind of scratchy and itchy, and so I may have to pause here occasionally to clear my throat and just so I'm not hacking all the way through this thing. I apologize, but it seems like I get this every fall. It's more allergies, I think, than anything. So let's back out, talk about the trades, and move on here. You can see as we back out what a nice trend that is. And it's really easy to find for the most part. But you can see each of these, you got this trend working up here. You get a close outside and a slightly new high, and then off it goes to the downside. You're moving down, you get a break here, and then you get pretty much a measured move down to the other side. And you actually get a failed break lower here and a nice little buy. If you were able to buy this right here, depending on how you bought it, actually I think maybe you didn't catch a runner on this one. I'm thinking you did, but let me just double check that. The entry would have been 73.50, and you can see that didn't get back there. So if you could catch that one trade right there, even if you waited to exit right here, you get a huge move. And we measured part of that a minute ago. Let's just measure from where you would have entered, and you wait till you get a break, and you go and you exit the first bar, break below a bar after that. So right there, That is 31 points on a single contract. I mean, it doesn't, you only got to catch one or two of those to make some really good money. So hopefully that's clear to you, why we want to try to catch runners. And usually the more aggressive you are, I don't really see this one's being super aggressive because it fits the rules of the trading range day. So anyway, even if you caught this one, you could ride it all the way. You would have got your first break here, so you probably would have exited. Well, it really depends on how you manage, but based on the way I generally exit my trades, you would have entered here and exited here. And I'll just show you what that would look like. That is 8.5 points right there. So yeah, thanks for a couple of you that reminded me about the measuring ruler, because I'd completely forgot about it. But now my headphones are beeping everything. My battery may die. Let's see if I can plug this in. Okay, I plugged my battery in so I won't die on me here, because we got a lot of trades to talk about. I'm going to try to move on through this with my throat and all. But anyway, we had a trend coming down. We had a break, moved to a new low, and then we're working up. This was all pre-hour. So when I came in, we were working on this right here. This is just right around 7 o'clock. And notice the new low there, pull back first entry, pull back second entry. There's two measured legs up, a failed second entry, and you get a bounce right off the trend line. Look at that big bullish bar. It's a big bar, so you got to either get in and with more than actually 2 ticks. Let's just see here. That's a 13. That's a $200 risk. So, if you don't want to, if you're only going to get some of these bigger bars when it's really crazy like this sometimes, and they're really good trades. So if you got to risk more than 8 ticks, then like you would here, then maybe you add an extra, whatever you got extra risk you add, and you could have got that easy because we go all the way up to the high before it even backs up here, and you could have probably got it all in that one move right there. So that's one of the ways to handle that. If your bars are bigger, concentrate on, if you have to have a bigger stop, concentrate on a little bit bigger profit. That kind of goes against what I said yesterday, in that, we don't monkey with the trades. The entry and exit part on the main scalp is pretty much, it's pretty much written in stone. But sometimes when it gets real volatile, you don't have any other option. And so I recommend trying to get a little more out of it. And it moves pretty quickly, so it's a little easier to get more out of it. It doesn't really seem like you're probably not in a trade any more than normal. So that's just something to think about. Until you get good at it, I wouldn't do that live. I'd work on that on the sim trade, and if you prove you can do it, then I'm okay with you trying it live. Otherwise, stick to the rules. So, but we come up here, we make a lower high here, and then we make a double top basically, and then we test that one more time, and notice how each time we went like 1 tick further, and then you get this big bearish reversal bar. So plus you got your break here and you move to a new high. I like this for at least coming back to the EMA, and so go short there. You get a second entry right there, but you're kind of in the EMA, right in it. You haven't really come below it and pulled back and tested it, so to speak. So I think you want to skip that one. You got to go short right into that low. It is a breakout pullback short, but I think you need to wait on that failed second entry long, which comes here. So go short right there. It's a quick, easy scalp. It does come back. It never gets your stop here, so if you wanted to hang on, you probably could get a little more out of this, but you should have already been scalped out of this one. Then it pulls back. I don't like going short right there. It's kind of a doji, and it's just really not taking off. This one is right off the EMA as well, or I'm sorry, not the EMA, but the trend line. So they're both very tempting, but they're so close to the previous low. This one you got to go low short at the low, it's got to break through, and there's often too many times it bounces there. So I think you just got to skip those and watch them go. There's going to be many, the way the market is lately, you're going to get plenty of trades. So be, be picky. Do not, don't be so eager to enter. Then you got a trend line working up. This is your first break, so you're going to get a retest, and you may even test way down here again because this is the other side of the range. And you get that first entry, tries to go higher. You get a little lower high here, so that's a failed second entry long. It fails and turns down and goes right out the other side. Just go short right there. Then it pulls back and gives you, and this is a double top, so you can count this as a failed second entry long as well, which is another trap. And again, it comes right off the trend line and EMA, and this is pulling back up underneath and testing it. So I like going short there, looking for it to test these lows. It actually kind of keeps going sideways there, and so I don't like going short here because it's more out of congestion. Hopefully you hung on to this one and you can ride, and you just get to ride it on down. And then we pull back. We get our first break of this little trend line and a big bearish part. It actually goes out the top and turns. It goes right out the bottom. Just be ready to go short there with a stop, and if not, let it break below this one and put your limit order back here where your stop should have been, and look below this bar and see if you can get it filled. And I believe you would have gotten it filled, and it just kind of drops on down. You do get a breakout pullback short here, but you need to be thinking more on the lines of, we're probably going to get a trap here, and see if you get one. And you actually do get one right down here, way away from the EMA. Notice you got your break, and then you back up. You don't want to go short there. You're too far into this. You've already had your break and a new low. But look at that first entry, and then it tries to go lower and fails. And look at that reversal bar. Go long right there. That's a second entry long counting from here. And look how it shoots right through the EMA, pulls back. It's tempting to go long right there, but you need to wait on that trap, and you get that right here. So it's tempting to go long again right there, but you need something a little better than that. Even with the trap, I don't like going long there because none of these bars are ending bullish here. If you did go long there, I think it still worked. Let me just, where was that? Right here. Your entry would have been 78.50. That would have been a 4-tick failure if you entered right there with a buy stop. So that would have been a failure, and you probably would have got stopped out. So that's why you got to be careful on those. But there is a shorter term trend line working up there too. And that's your first break. So you're looking for a new high, but that's so close that, you got to be real careful with it, because a lot of times it'll go one tick higher and then turn down. So, but you are looking for things to bounce out of here. So just wait and see what happens. You really need to let it come back. We're probably going to notice how we went through here. We came back and tested, and we talked about it up here. When we come back through, prices are going to try to pull back and test it. So that's the main reason I really don't like going long right there, because we haven't come back and tested that. And you don't really have proof or evidence that you got a strong trend yet. So forgetting to put these back. But then you come back and you test it right here, push higher, and you push back through the EMA, you pull back, and look at that big reversal bar. Now I like going long. Go long right there, and off it goes. And if you catch that one trade, even if you just ride it to here, and you exit up here at the top, you're looking at 15.5 points. So hard to beat that on one trade. And there's actually, I forgot to circle that one. There's a shorter term trend channel in there too, and I forgot to circle that one. And somebody actually asked me about that. They said, oh, I see two channels here. Well, there are. One of them shorter term. You may not be able to see that shorter term one. It's really light one. That's a shorter term one. I'll just make it darker. See if maybe it shows up a little better. Oops, wrong one. I was working with it first, but when you just keep going higher here, it's obvious something else is going on. And really, you should have drawn it off these two a little flatter as well. But anyway, you've got a shorter term one in there, and he asked me about that. And they're both valid. One of them's just a smaller time frame than the other. But notice this failed second entry short that bounces right off that short-term trend line. I like it for a long. And then you come back here, and this bounces. This kind of confirms the bigger pattern, which if you drew, even if you couldn't find it on the bottom, if you drew these across the top, you see it's fitting there, and you drag it down, then you see it's just a perfect match down there. And so that's really what helps you determine that, hey, there's probably another trend line here. And this one is a little close to here, but we just came off the low and we're strongly trending up. So where do you think we're probably going? We're likely going right here at a minimum. And so that gives you reasons to want to stay in this. And then notice we pull back again and we break lower and turn up. We break lower below that bar and turn up. So I like this one if you can get in low enough to get out before you get back up here. So you got to probably use a limit order, and you would have got filled on one because it broke higher and backed up a couple of ticks there and then took off. I do like this one because it's a breakout pullback, and it's pulling back and testing this area right here, this resistance area from the earlier, and you get this big bullish bar. You got to go long at the high. It's not quite the high of the day yet because the high of the day was up here at this level up here. The high of the day was at basically 1895 almost. And you can see you've got a little bit more room here. And then it breaks out and pulls back. And this one, now you're going long pretty much at the high of the day on a breakout pullback. I'm not as crazy about that one. It is right off the trend line. There's not much room to scalp out. There's some reasons to consider it because this is a strong trend and we just keep bouncing off of it. You get another one here and another one here, and they just keep going higher. And you really never get a fake out because it breaks lower here, and then you know not to try to go long then. And notice how it pushes a couple of legs up, gives you a new high, and then it tries to correct, and it actually goes up and makes two more legs to a new high, and then you get your correction, a break. That's a two-legged correction, so look for that measured move from here to here. So when you go lower, you're looking for it to go here. And look, we basically got a perfect measured move almost, maybe a tick difference. But this is a failed second entry long right here. It's really just a confirmation of the trend line because we did push higher a couple of times, but there's really two measured legs down to right in here, and then it bounces. So you could treat that on a bigger picture, similar to a failed second entry long. The big thing is it's the third touch of that trend line, and it's a fairly bearish bar. It could have easily ticked lower as it did higher just at the close, and yours might even be bearish. So I like that one. Looking for it to push down and test these lows. There's enough room to get out before you get down to the double bottom there. Then you pull back. I don't like going short on this first entry because it's a break of the trend line, and something different may happen. But you get the break of this one coming down, and you get a move up, and then it turns down as soon as it makes a double top out on a new high. And there's some resistance going across there too. So really, if looking at that, you probably could have taken that short, but the fact that I don't like it because you got that little trend line working higher, and we don't have a break of it yet. So I think you're better off waiting, especially when this was been so strong. And I think you're just better off to wait than go short right there. Even though it worked, it could have, bounced off the line, or it could have gone just a couple of ticks and then went higher. But there's still some reason to consider it because it's a double test of this area right here. It's a bearish reversal bar, so I'll make it green. But I think you're better off to wait on a better trade on a day like this. And that came right here. You may not get in this trade. I don't think you want to go short below this bar. I think you want to wait on this one. And it doesn't come back. There's no way to get filled on a limit order. I just think but if you know what's going on, and we're probably coming down to here and at least probably going to make a new low here. If you play this and put your stop up here where it goes and so forth, I'm okay with it. I don't think it's that big a deal once you understand price action. You're really good to worry as much about the 2-point rule. That's more for the new people that are struggling and can't seem to make it, and they get their trades right, wrong a lot. You need to stick to that rule if you're like that. If that describes you. But if you're comfortable with a little more risk and it doesn't shake you up or make you change your thought process while you're trading, and then I'm okay with it. So, because I don't worry too much about it, I'll be honest with you. If I see a trade I like it, I put my stop where it goes and I trade it. Simple as that. But we're working down. There's a trend line coming down here as well. I don't have it on here. I don't think you want to enter any more right in here, to be honest. There is a failed second entry long here. So technically, and it is a breakout pullback short. It's somewhat of a repeat pattern. We saw this earlier too, so on the bigger channel. So you might take that one as well. I'll give it green because it is a trap, and you can treat it like a trap. Definitely wouldn't enter on any of this. And then we get the break, move to a new low, and you get that little trap right there. The only reason I didn't like this one is there's a lot of overlap right there. It's not very far to the EMA. You'll probably get a better entry than that. I'd rather you enter here than here, to be honest, because now you've pushed on through and proven that, hey, it's trying to reverse. It backs up, it closes above and goes higher. That's a second entry long. Again, I'll make that one green. I don't like it for blue, but I do like it for if you're wanting to be a little more aggressive. So I think you're better off to wait, like I always say, on these reversal patterns till you get the failed second entry short, which comes right here, and when it breaks above this bar, that's your failed second entry short. Take that one and look for a measured move similar to this one. See that first leg, and then there's your second leg, and we miss it by maybe a tick. We're getting a perfect measured move, and it turns down. Of course, we're looking for longs now because we got a trend working up. This is not a trend line, although there's probably a shorter term one in there. That's our arrow showing our measured move. But look at this one coming down. There's a second entry long right there, but you probably wouldn't have this trend line yet, and so that's a problem going long right there. It did shoot right through the EMA. It's a failed break above this resistance area right here. So, and then it's a failed break back down below. Actually, it's not really a failed break below because we've already broken below. So, but you can see that original support across there. That little failed break lower. I wouldn't trade it based on that. But you got this trend line. So I think you need to wait and see if you get a second entry off the low. It gives you a little better setup. And look what happens. It reverses, pushes right through. It tries to go low once, goes higher, tries to go low a second time. You get that one little tick lower and it turns up. Bullish reversal. That's a second entry long from here. Pull back first entry, pull back second entry. It's a failed second entry short. It's a test of this previous support resistance line. There's several different reasons I like that one, and look at it go. And then it gets up here to the top. You get one working down, you get a break, and you get two perfect legs down back to the trend line. You get a reversal bar. This one's pretty big, so you might try a limit order. You would have gotten filled back in this one where you would have been close to your 8-tick rule, but a lot of times you'll miss some good trades by doing that. But this wasn't a perfect close on its high, so prices are bouncing in here a little bit. So that's when you're more apt to get filled on a limit order, when they close on their high, most of the time, like this one, or real right at their high, they take off. But notice this one doesn't. There's a couple of ticks in there, and it does back up a little bit. Doesn't mean it'll always do that, but that's just a clue that tells you it may break through. And I meant to show you this too earlier down here, um, where we're working up here. Notice how every time we pull back, we make a higher low. That is generally a sign that you may push through a support or resistance area. There's somewhere else I wanted to show that. Oh, it's right here. Notice how we've got resistance across here. We haven't got up there. I'll talk about it. I was thinking we passed it and I'd forgotten about it, but this is it right here. We'll talk about that in a minute. Then we push higher. We get a breakout pullback long, second entry. But the main reason I like this one is you made a new low, right? Or you got a low right here, and you go lower, try to go lower once, you try to go lower twice. And so that's a double test of that area. It's not really a failed second entry short because it's not a new swing low there, but it's enough failures to go lower that we're probably going to go higher, and we aren't up to the upper side of this trend line yet. Actually, at that point, I had this, I think, up here, and it would make sense why you had it up here. But later on, I kind of tightened it up. I think it's really down here, and we were just overshooting here. The market was just so strong. But this is a nice long for the reasons I just talked about. It is a little risky because it's going long right into that resistance and not much room to scalp out. So I did mark it green, but there are reasons to go long there. Then of course we back up again. Notice now that is a new swing low. Pull back first entry, pull back second entry. It's a failed second entry short. It's a double test of that support resistance that held as support. So I like going long there. It's not a real bullish bar, so you might let it break higher and drop a limit order in and see if it'll come back a tick or two, and it would have. But like I said, you got to weigh that out because a lot of times you'll get left behind on that. This was a breakout pullback long, but that signal bar is just not very good. There's not enough reasons to try to go long there. We are making higher lows, even though we're not getting through this resistance. And notice how we're making higher lows every time. That is a strong signal that, yes, we're probably going to go higher. And that's what causes wedges and things like that. People, see these wedges. There's really, I don't believe there's anything, there's not such a thing as a wedge. The wedge is created by the channels and support and resistance and things like that. And it looks like a wedge, but if you know what's really going on, you realize that there's just resistance there. That's a strong resistance area. But the buyers are getting stronger every time, or the sellers are at least getting weaker every time. They're more bold to be selling here, and you can see they're getting less and less bold because it's not going down. And then suddenly it breaks out and they got all exit. And then they come to find out they were just a little bit early because it runs up here and runs all their stops, and then it goes down just like they thought it would. That's what generally happens to traders. But anyway, that is a second entry long, failed second entry short. This was a second entry long as well. This is a double bottom. So you can treat that like a new low. That's a first entry short, pullback second entry. So that's a failed second entry short, a second entry long, and we're making these higher lows. It's right off the trend line, so I like that one. It's a big bullish reversal type bar. It did break lower first, and then you make the breakout pullback, and so I like that one because to fail that many times and keep bouncing off the trend line, there is enough room to get out before you get up here too. So you probably get filled on this, and then it tries to come back, even though you would have caught a runner on this by a tick or so. And if you tried, I generally on these kind of trades, I probably wouldn't hold on to a runner, at least not until we get a breakout pullback or something like that. But this turns out to be a good move, and that got you into the 2 o'clock hour. Of course, there's no more entries because this is just all moving straight up. So really interesting day. This is about a 34-minute chart lesson too, so I'm going to wrap it up. I hate for these things to drag out so long. I've actually got some comments that people like me moving faster. There's always, I'm a southern guy with my, we're slow and easy, and I know some of you New Yorker types, y'all are wide open 100 miles an hour, and so my pace probably is slow to you guys. I apologize, but I think most of our people trying to learn are like the slower pace. But anyway, I appreciate the feedback, and I'll try to speed it up where I can and move along. But that's going to do it for today. Again, probably no chart lesson tomorrow. Definitely not one Monday. And we'll be back to do this again most likely Tuesday morning. So I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.